right. I love that jingle. Welcome, welcome, welcome. That means we're about to get going on another show, another episode of the Tatro Show. Great to be here Monday, November 16th, 2020. And what's been a nice little stretch in the market here. Exciting times if you're invested, if you own equities. We've seen a nice rally here. I'm excited today, not just because of what's happening in the market, but really the guest I have on my show today. Not every day we get president and CEO of a company that manages over $1 billion with a B. Pretty exciting to have a CEO and president CEO. And I'll introduce him in a sec. President CEO of Evolve ETFs. Right now, let's bring him in. Raj Lala, welcome to the show and thanks for being here today.
Thanks for having me on, Rob.
All right. So again, I'm Rob Tatro from robtatro.com, portfolio manager here, Canaccord Genuity Wealth Management, and the Tatro Wealth Advisory Group. It's been fun for sure these days doing the show. If you're watching on YouTube, please take a sec to subscribe. Make sure you like our stuff on Facebook. If you're on Twitter, Instagram, or LinkedIn, wherever you're watching right now, please take a sec, subscribe, like, share, tell your friends. Take one moment to subscribe. You're going to love the content we produce. It's really good stuff. Quality guests like Raj. It is really, really interesting. Today, the topic is basically e-gaming and the boom that is happening there, the industry that is booming. It's been booming now. I mean, I'll ask Raj this in a sec, but maybe first, let's talk a bit about real quick. Take a look at some of the headlines today in the market. So markets rallied a lot today, 300, 400, 460 points or something like that on the heels of a potential vaccine. Anything else you see there that's moving the market, or is it a combination of stimulus, election kind of being resolved, and the vaccine kind of moving the markets positively?
Yeah, absolutely. I think you're definitely seeing a little more optimism towards eventually us going back to work. Now you've got two companies, Moderna and Pfizer, in the hunt for a vaccine. So it'll be great to see how this gets produced and how this gets distributed. And I'm looking forward to going back into the office for sure.
Yeah, I happen to be in the office right now. It's a pretty skeletal staff. As you know, Winnipeg has been under duress from COVID. We'll call it that. I think we have a positivity rate of 15% right now, 15% positivity test rate. We're announcing, double-digit deaths every day for a population of 1 million. It's pretty significant. A lot of people are dying here in Winnipeg, and it's not been great. Schools are shutting down. My kids are partly at home now. Rural towns are shutting down. It's been pretty bad out here. You're in Toronto, right, Raj?
We are, yeah.
How is you feeling it up there?
I think we're up to about 1,400 cases a day. It's growing. I remember back in August, we were kind of plateauing at about 70 a day. So it's increased significantly. We're going through another phase of shutdowns. I think everyone's trying their hardest to keep the schools open at a minimum. And I'm hoping that's the case, because I think it's really important for our kids' mental health to be in school. So hopefully we're all properly social distancing and being smart about the way we conduct our personal lives.
Yeah, just carry this with you, right? Carry this with you and just wear it all the time. It's for me anyways, that's what I do. Doing my part anyways, and growing a greasy mustache for November to raise money.
Notice prostate. Looks good.
Yeah, it's Prostate Cancer Canada and the Canadian CMV Foundation. I'm raising awareness for health charities, men's health charities, and health charities. So that's what I'm doing. Now, today we're talking about e-gaming boom. So first of all, you're president, CEO of Evolve ETF. One of your products, full disclosure, is called Hero. It's an ETF focused specifically on that. It trades on a TSX. But let's leave that aside for now. Tell me real quick, or not real quick, whatever, it's up to you, about your story, how you started Evolve. It's a pretty neat story.
Yeah, I'll try and move pretty fast through this. So we started Evolve at the beginning, towards the end of 2017. I started working on it at the beginning of 2016. Prior to putting a company together, I ran Canada for WisdomTree, which is one of the world's largest ETF providers. Prior to that, I ran the retail business for Fiera Capital, which is one of Canada's largest asset managers with almost 200 billion in total assets. When I started working on Evolve towards the end of 2016, I really wanted to focus in on a couple of areas. I knew that, the country already had enough TSX 60 ETFs and Dow 30 ETFs. But where I saw a great opportunity is on two sides. One, actively managed ETFs. I'm a big believer that within fixed income specifically, good active management can make a big difference on a risk-adjusted return basis. So we partnered up with some pretty large managers, both domestically as well as globally. And then the other side to our business, which is where we've gotten a lot of attention, has been around our equity growth strategies. And more specifically, they all kind of encompass disruptive technology. So we launched Canada's first and only cybersecurity ETF, Canada's first innovation fund, Canada's first future of the automobile fund, and of course, the one that we're talking about today, Canada's first and only e-gaming fund. And really what they do is they allow investors to express a view on a specific sector. I think is really important. Rather than sitting across the table and talking about bond deals, you can actually talk about the latest hack that just took place in terms of a company's data being breached and how the investable universe can evolve within those sectors. So we find it pretty interesting. We find it pretty exciting. And what's been great is our performance, has been within the top 10% of all ETFs for all four of those funds since their inception date. So we've been blessed with great support, and we've been fortunate to have some great performance as well.
Yeah, and I mean the 10% top decile for all four of your ETFs. I mean, that's blessed for sure, but I think that's a bit of a vision of this whole disruptor, the thought of these disruptors and automobile, cybersecurity, e-gaming. Sorry, what was the fourth?
Innovation. So broader
yeah.
Disruptive tech. Yeah.
So, I mean, that's
I think that, and thank you for that. And I agree, I prescribe to the school that disruptive technology is going to be a big driver of our market growth over the next 10 years. And unfortunately, most investors have very little exposure to it. There's been some great studies that have come out in the last year or so that says that over the next 10 years, about $90 trillion is going to be added to our equity markets value. And half of that is going to come from disruptive technology. Yet I would say that the average Canadian maybe has a 5% exposure to disruptive technology areas of the market. So I think we're very underexposed. I think if we don't start to embrace disruptive technology, we're going to potentially miss out on a significant portion of the growth that's going to take place in our markets.
And I mean, technology has been disrupting the market and society as a whole for 150 years. You think of, the revolutions that have happened and the assembly line and, go back to Ford, and go back to, through the 40s and through the 60s when you had the first computers and, the internet in the 90s. I mean, it's the same story. It's just playing out differently, I think I would argue.
I think you're absolutely right. I think, it's a common thing for us to overestimate the short term and underestimate the long term. And you're absolutely right. I mean, you can go all the way back to the horse and buggy. And when the first automobile with Ford came out, everybody thought nobody's going to give up their horse and buggy to use a car. And, here we are today, hundreds of millions sold on an annual basis. You could go even closer to the internet. Most people thought that the internet was going to be a fad. Obviously, that's not the case. Most people thought that the smartphone was going to be a fad. Obviously, not the case. I remember 15 years ago when Netflix started to put way into the industry. Most people said, well, why would you not want to go to Blockbuster and take that case and look at the description of the movie and take it home and then pay all those crazy late fines, bring the movie back, or even before DVDs, you didn't rewind the movie. But nobody thought that Netflix was going to be successful. And here we are today. All of Blockbuster stores are closed and Netflix is the go-to streaming media. So our world has changed a lot. And, sometimes when I say to people that, over the course of the next 10, 15 years, you're going to be in a car where there is not going to be somebody sitting at the driver's seat. You're going to most likely have a robot living in your home, helping with day-to-day. Some people just think that that's just too Jetsons, right? That's just too far-fetched to believe. But if you think about the way our world is today and how we've progressed over the last 15 years, you can appreciate that if you continue along that trajectory, the next 15 years is going to be significantly different. And I find that kind of stuff very exciting, specifically as it relates to technology.
Crazy that Netflix actually started out as a company that would send you DVDs through the mail. You'd order them online, and they would you would get flicks through the internet. It's crazy that they didn't start out of that. Only that they shift after. They had these big red boxes. You remember this in malls? And
I remember.
Put $10 in, and you'd rent a DVD, and
you'd have to bring it back.
Crazy. And I think of the evolution, evolve. I guess that's where you got your name. Like, I think of my grandma, who's 96, and in her lifetime, what she's seen. So we think of the world evolving. We're never going to get to the Jetsons. I'm sure. What were they thinking? Possibly that they would have smartphones, and they'd have, just think of what's happened in my grandma's life. She gave birth to my mom and her siblings on the farm in the middle of nowhere, without going to the hospital. And now, she's got an iPad, and she's playing Candy Crush on her iPad, so great segue.
It's very different.
Yeah, very different. And she's playing Candy Crush on her iPad. So, when she's not knitting boots for her, I think she has boots and blankets. I think my Mama Grenier has she's got 30 grandkids, but I think she's got 70 great grandkids or something like that. So
wow,
it's pretty special that she knits something for every single great grandkid, either a blanket or, anyways, pretty special. I love her.
She's very blessed.
Yeah, and we are too. But let's get to e-gaming. So the boom that is happening. So tell me how this started in your mind, and tell me when you decided you would set up an e-gaming ETF.
So a couple of years ago, about 2.5 years ago, we started looking at this space. And I would say that there's really two aha moments for us in terms of deciding to put the product together. The first one was seeing that stadiums were getting filled with people going to watch other people compete in an e-game or an esport. And I couldn't fathom something like that within my generation, like why somebody would go to a stadium, buy a ticket, and watch other people compete in an e-game. So that was an aha moment, because it made me realize how big the viewership was and how big the engagement was and interest in the space. The bigger aha moment for us that made sense from an investment perspective is how these e-gaming companies have completely changed their entire revenue model. So let's think back. Most people remember ping pong if you're over the age of 40, Space Invaders, Pac-Man. So if you were interested in a game, what would you do? Well, you'd go to the arcade and you'd play it, and you keep popping the quarters into the machine, keep playing to continue. Or you would go to the store and you would buy the cartridge and you'd bring it home and you'd plug it into your console, and away you'd go, which was great. Except that's where the revenue would stop for the e-gaming company. In today's world, you have a much more intricate ecosystem as it relates to e-gaming. And that was the major moment where we decided that we needed to launch an e-gaming fund, because these companies, what they do is, for example, there's a model called the freemium model. The freemium model kind of sounds like what it is, which is you can download the game for free, but then to unlock a level or to add a character or an avatar, you have to pay a little bit of money. Like Fortnite, you've got to pay for skins, for example. And so even though you could download the game for free, you would still be spending money. In fact, in today's world, the average millennial in North America is spending over $110 a month on e-gaming. So you would see stuff like that. And then you would see how these e-gaming companies just continue to increase engagement. And guess what? If you've got millions of people watching two people compete in an esport at the stadium and online, well, then if I'm Coca-Cola or if I'm Red Bull or if I'm T-Mobile, I want my brand there. So now I'm going to start spending money on advertising in these games and in these events as well. Then you get sponsorships also And then you get media rights. Some of you have probably seen that ESPN is now broadcasting e-gaming. TSN now is broadcasting e-gaming. So now you think about this massive ecosystem that these e-gaming companies have created, not just from the in-app purchases and the boosters and the weapons, but also from the events, also from the sponsorship, also from the media rights and advertising as well. So it's become a much more intricate revenue model for these e-gaming companies, and that was the big deciding factor for us to actually launch a product like this. Not to mention, by the way, that there are over 2.2 billion gamers worldwide, which is about a third of the world's population that is spending 6 hours or more per week e-gaming. So when you think about the sheer numbers, you think about the engagement, and you think about the revenue model that these companies created, it's such a fascinating industry.
2.2 billion that plays 6 hours a week.
Yeah.
Yeah, it's on their phone, right? I see them all over the place. They're walking zombies, right? People play this on their phone all over the time. I want to ask you about, so you mentioned a good story about the skins. By the way, I can't get over this skins. I have a good friend of mine who told me that his son got into Fortnite, and he's all of a sudden I guess the credit card got saved in the system, or I don't know what, but he told me he got his credit card bill and he almost lost his mind when he saw that his son spent like 400 USD on skins. So these skins are just outfits that these characters wear in the Fortnite game. And he's like, he was looking at me and he was like, just lost and confused. He's like, how is this possible? How is this possible? Because back in his day, I don't know what was.
Fortnite engagement is incredible. I mean, when you compare, like Fortnite right now is generating about $95 per user, which is about 3 or 4 times more than Google's users, Facebook's users, Snapchat's users. Now, let's be fair. Those users, there's way more users that are with Google and Snapchat and Facebook. But the point is that this company has done such a great job of building this revenue stream, this recurring revenue stream. And, a lot of gaming companies now are also going to things like monthly subscription models as well. So, EA Sports, or Electronic Arts, I should say, you pay $9.99 a month and you get access to their entire catalog as well, which, was great. It's a little bit like the Netflix model of e-gaming. So to me, it's very interesting. But Fortnite has definitely done such a fantastic job of creating engagement for themselves.
Well, they're getting so much per user. If ever they're able to get user growth, like the numbers would be off the chart, right? Because it's not like they get $1 per user, right? They're getting $95 per user. So they need the growth. And if they get the growth, the dollars are going to come. Now, you talked about the recurring revenue model. So let's touch on that. For a lot of viewers at home, I'm sure they're unfamiliar with this, but e-gaming is moving a lot or some to this model. Like, I mean, I know for me and my PS4 that we have at home for my kids, I know I still buy the old games on Amazon, and the games show up and we play, or we download them through the thing and, put the credit card number in. But we're not on the recurring model. So does PS4 have does Sony have you get all our games for X many dollars? No, it's per producer, right?
It's per producer. That's right.
Yeah.
Well, so Microsoft is moving through, Xbox is moving to a monthly subscription model. Ubisoft is moving to a monthly subscription model. EA is moving to a monthly subscription model. But you have choice, right? You can either do the monthly subscription, or you've got to weigh out cost benefits. Probably if you're playing 1, 2, or 3, more than one game with EA, then it might make sense to pay the monthly subscription. But if you're only playing one game, it's probably better for you to just continue and pay per use.
I remember our first gaming system. I'm going to ask you: Did you have a gaming system when you were young, Raj?
I had Pong way back. Remember the paddles where you would turn it, and then eventually I migrated to Intellivision. I never owned an Atari. Surprisingly, I went straight to Intellivision and played that, and then eventually Sega as well.
So all of my friends had the cool friends had the Atari kind of home console. Sure. We had the Atari computer, like the Atari where you get the 5 3/4 floppies, these huge monstrous things that you would put in and you'd fit like 1 or 2 games or 3 games on a what was that? That was like 200 200K. Am I right? 200K
Probably something
on
like
one
that.
floppy
Yeah,
like that.
one floppy.
And like,
yeah.
you'd have games that were whatever, Jungle Gym and whatever. And then eventually I begged my parents. I begged. All my friends had a Nintendo. We didn't have one. I begged. I was like a teenager by the time I got my Sega. And it was a bit of a life changer for me because I spent way too much time on that. My brother and I, we were big into sports video games. We played a lot outside, but
we all
played a lot of
did.
video.
We all spent too much time for sure.
Okay, so let's try to understand this this revenue model in the this ETF first of all does not focus on esports as I understand it, right? Esports would be
Correct.
the League of Legends and the Dragon Ball Z and the what are the other big ones that they're playing now? They're playing
Dota. Dota's a big one. Dota's prize pool, for example, I think about a year and a half ago was $26 million. It was a bigger prize pool than the US Open. Like it can be pretty nutty. It's interesting along those lines. I made that comment at the beginning that I couldn't understand how people would congregate to an arena. Obviously, they're not doing that right now with COVID, but congregate to an arena or even online, watch other people compete in an esport. And I remember I was talking to a professional gamer about this, and he said, "Well, Raj, with all due respect, I don't understand how people in your generation watch cooking shows or home improvement shows. To us, that's really weird." And I thought, that's a really fair point. We tend to kind of, look at everything from our own perspective and not necessarily appreciate theirs, because to me, that's absolutely true. They find that kind of stuff really interesting to watch. To extend on your point, I mean, a lot of the e-gaming companies do have some level of involvement with esports, but esports are not really a strong component of the fun.
Yeah, I mean, for me, I was a younger brother. I had an older brother, Charlie, and he always, so we had a computer. We eventually got like a 286, and then we got a Commodore 64, then a 286. My parents were big in computers, and then we eventually got a 486. So we'd play like the Sierra games and King's Quest and Police Quest and Hero Quest. And my brother always had control of the keyboard he was always making decisions. So I was one of the first esports.
Was he your older brother? Was he your older brother?
Yeah.
There you go.
So I would sit there next to him and he would play and I would watch. So I kind of understand the watching of games, but you're right. This is a thing and the Twitch, like the following these guys and gals get on Twitch is just unbelievable.
It's nuts. Like, I mean, 3 billion hours were watched on Twitch in Q1 of this year. 3 billion. 3 billion. I mean, that's like, the viewership is astronomical. I mean, 11% of all of the YouTube viewership is towards gaming. And think about how massive the viewership is on YouTube. 11% of it is specifically around e-gaming. That's not just people watching other people in tournaments. It's also, trying to get better at your gaming experience by watching other people play, learning like some of the tips and the tricks and stuff like that to progress within a game. But yeah, the viewership of e-gaming is massive.
Well, I remember when we were young and we'd get stuck at a Sierra game or we'd get stuck at a specific point in the game, we'd have to wait till my parents would bring us to the city, to Winnipeg, because I grew up in the country. We'd go to the Centennial Library and we'd pull out the e-gaming. We'd pull out like or whatever it was called, the Nintendo Monthly or whatever it was called. And we would like find the clues to how to pass a certain level. And nowadays, kids or whoever just go on YouTube and watch whoever passed this level or passed this. So that's changed a ton. So I can totally see the appetite for Google. A reminder, if you're on YouTube,
that also applies for our homework too. Remember, Encyclopedia Britannica. Now it's just all online. It's so much easier, right?
Yeah, and when I'm trying to do my homework with my kids now, when I'm trying to explain something and I'm looking at the homework, I'm like, I don't remember exactly how to do it. Google it. YouTube. Yeah, it's on there for sure. Speaking of YouTube, if you're watching on YouTube, take a sec to subscribe. If you're watching on LinkedIn, Facebook, Instagram, Twitter, please make sure to follow, like, share. We love your comments. Subscribe by now. If you're watching this and you haven't done it yet, press the red button and subscribe. You're going to like it. Help me get to 3,000 subscribers. So I want you to help me explain, help me understand, and help our viewers understand the size of this market. I know this is tough to do, but I mean, we kind of have an idea for how big Netflix is, right? How big the music industry is, how big the video industry is, like video streaming industry is, how big the movie theater industry is. I'm guessing our viewers have no clue how big e-gaming is.
Most people are pretty surprised about how large it is. So right now, the gaming industry is about 160 billion total size, growing at just over 20% a year. Compare that to film and music. Film and music is about 60 billion combined. So e-gaming right now is about 2.5 times larger than the entire film and music industry combined. The behemoth is television, and that's about 260 billion. So it's expected that over the course of the next few years, e-gaming could overtake the entire size of television. And in fact, remember when Disney Plus came out just over a year ago, Reed Hastings, who was the CEO of Netflix, is co-CEO of Netflix and co-founder of Netflix, was asked if he was concerned about Disney Plus coming to market. And his exact comment was, I'm actually more concerned about Fortnite than I am about Disney Plus, because of the amount of engagement in this gaming. And think about it, like, it's also like during COVID, it became a bit of a social media platform as well, because while everybody was in lockdown, it gave them an opportunity to communicate with their friends through a platform of e-gaming, whether it be Fortnite or any other game. So to me, it even though you could look at it and say it's a bit of a waste of time to participate in gaming, there is actually some ancillary benefits. It's been good actually for a lot of people's mental health, and it's been good during COVID for social networking as well. But it's a very large business. It's expected in the next couple of years, it's going to be about 200 billion. And just to put that into a little bit of perspective, the current size of 160 billion is the entire size of our Canadian banking sector.
Yeah, so it's the size of the Canadian banking sector. Okay.
Yeah.
And I believe the entire Canadian cannabis sector is, I believe the total demand is like 6 billion. So it'd be like, whatever that number is, 20 times the Canadian, or 30 times, right, or whatever it is. Did you say 60 for music and film? 60?
Combined.
160 for e-gaming and 260 for TV.
TV, that's right.
Okay. So you can kind of put in perspective. I would imagine 10 years ago.
It's got somewhere to reach towards.
Yeah, there's a number to reach for. Now, a lot of people think e-gaming, they think, teenager basement, Doritos, hasn't seen the daylight in 2 days and like is just down there in his gitch. But that's not, I mean, that I'm sure that's part of it, but that's not all of it, right? There's part of it that is my grandma playing Candy Crush on her iPad, right?
Yeah, I mean, look, there's not 2.2 billion teenagers gaming for sure, right? I mean, that's the number. So it definitely that's the step in the stereotype for e-gaming, no doubt about it. But it definitely transcends multiple demographic groups. You have a lot of 40-something-year-old professionals. I've got some friends that are in banking that told me when we were launching the fund that they get up every Saturday morning and they hop online with their colleagues or friends and they compete in a game via an esport. I have my mother as well is an avid player of Candy Crush also. So there's a lot of people, there's a lot of demographics that are using it to spend some time. And guess what? Obviously, during COVID, a lot of people had a lot more time to spend. But now, as you move forward, if you feel that we're going to be going back to work and going back to the real world as we reopen, I believe that it's still going to take a while for that to happen. We've definitely seen e-gaming create a long-term behavioral shift where people will continue to actually utilize it. And what's great about e-gaming is that it is one of the very few forms of entertainment that has strong elements of recession resilience. So if we fast forward a year, 2 years from now, and our world has gone back to some level of normalcy, most likely with all of this funding and all of this aid that's been put out there, unfortunately, we're going to be in some kind of a recessionary environment. And so even when fancy restaurants reopen, even when you can go to shows and things like that again, you may not have the disposable income to do that. And so what are you going to do? You're probably going to stay home and you're going to look for a low cost form of entertainment. So let's say like a game like League of Legends or something like that ends up costing about 16 cents per hour of entertainment. You compare that to going to the theater, works out to be about $7 or $8 per hour, and I'm not even including the cost of popcorn or pop in there. So you can see that e-gaming actually has really strong tendencies of recession resilience, which I think is going to be really important. A low-cost form of entertainment is what is going to be relevant over the next year or 2 years for a lot of people.
I want to ask you about the later. I'm going to ask you about specifically Hero ETF and valuations and multiples and kind of what you see for that. But first, I want to ask you about this new generation of consoles that is coming out. So, these come out I remember when the PS1 came out. I remember when the PS2 came out. I remember when the PS3 came out. I remember when the PS4 came out. And I certainly remember now the PS5 is coming out. So this happens every, 5, 6, 7 years, something like that?
Like dog years. Yeah, like 7 years that you have a cycle.
So now we're into the fifth generation of these type of consoles. Xbox is coming out with a new one. I believe Microsoft is as well. What impact do you think that'll have on the future of e-gaming? I imagine it's going to be some sort of economic boom inside the industry. Yeah,
so PS5 came out actually last week. Xbox is supposed to come out in the next couple of weeks, sometime this month as well. It's the first time in 7 years, basically, that we've had a release of 2 new major consoles just in time, of course, for Christmas. They're already sold out.
Yeah, you can't get one. You cannot get one if you want to.
You could pay a massive premium to probably get a black market version of PS5. But what's interesting about that is it's great for the hardware manufacturers, like Microsoft manufactures Xbox and Sony manufactures PlayStation, so PS5. But really, where the investment opportunity comes in is the games, the game producers. The publishers that are going to create the games that are going to custom for the richer graphics, the better consoles that are going to come out. And so to me, the gaming companies like the Activisions, the EA, on producing those games for those new consoles that are going to be richer, more powerful, faster, and just a lot more fun to play.
Okay, so transition into this ETF. So Hero is the ETF. It trades on the TSX. You could pick it up. This is Evolve's ETF. In there, you're not going to find stuff on esports. You're not going to find stuff on League of Legends Tour, the Pro Tour, or whatever. But you do have stuff specifically. If I were to kind of look at the top holdings, Japan looks like Japan and US are kind of the Japan, US, China, Korea, Singapore, Sweden. That's kind of where these companies are coming from. Relatively concise number of holdings for an ETF, 75 or so. Nintendo, Nvidia, Activision, NetEase, Ubisoft Entertainment, Electronic Arts, Now these are Capcom. These are the kind of companies that are in there. What kind of multiples are these companies trading at, and how do you decide what goes in to this ETF?
Right. So this is an index-based ETF, so it's passive. We work with an index provider called Solactive. They're doing probably about a quarter of all the ETFs in Canada today. And what they utilize is a classification system that's run by a company called FactSet. And FactSet creates the classification for e-gaming companies effectively. And so every company that gets categorized as e-gaming makes it into our fund. We market cap weight it. So any e-gaming company that has a minimum market capitalization of $100 million and also minimum average daily traded volume of $2 million makes it into our portfolio. And as you said, right now we have about 79 positions in the fund. So it's kind of I would say it's fairly large in terms of the number of holdings. But I mean, the average market cap is not small within the fund. The average market cap is $8 billion. So I would classify these companies tilted a little bit more towards large cap. You asked me about value or PE.
Multiples. Yeah.
Multiples. Right now, just to kind of put it into perspective, e-gaming companies are trading about 23-24% cheaper than the NASDAQ is, which is pretty significant considering that these are technology-based companies. And part of the reason why they're trading significantly cheaper is because their earnings are growing much faster than the price appreciation of their stock. So we actually, even though our fund has had a great run from a performance perspective, we actually feel over the longer term there's great value within the portfolio.
Yeah, that's super interesting. So what kind of multiple would this be? It's still a significantly high multiple relative to kind of traditional valuations, but are the companies in there profitable? Are all of them profitable? Would they all have a PE?
Not all of them. About 80% are profitable. Okay. But the ones that have negative earnings would be struck from a PE calculation, of course, because they're still aspiring towards it. But yeah, I mean, their earnings have been growing. The average earnings growth in the portfolio has been about 25% a year. So it's pretty significant.
Yeah. So if you're growing your company's earnings growth at 25% a year, forget what happens today or tomorrow or next week or next month. Long term, the market is going to reflect that earnings growth into the value of the security. So this is something that I think if you believe in this story, this is something that would make sense for you to add. Don't do it as a trade. Don't do this as a trade. And by the way, don't take this as advice because I don't know what you own in your portfolio. Full disclosure, talk to your advisor or talk to us. Go to www.speaktorob.com, book a no obligation consultation. But in all seriousness, if you're pondering this, if there's a move, if there's some sort of correction here, if it's down 15, 20%, by all means, that's not a reason to get out of the sector if you believe in the story, right? Because the story is something that is going to be in 5 or 10 years down the line. It's not something that's next week or next month, right?
Yeah, I think you're absolutely right. I mean, look, I think, some people have been a little bit concerned about the world going back to normal, and, so the growth in e-gaming may just kind of flatline here. But when you think about the macro side of this space, first, as I mentioned before, you have a long-term behavioral shift that's taken place. And you have this long-term behavioral shift that's taken place in a lot of different industries, right? Telehealth is a great example where, a year ago, only 8% of the Canadian population was using telehealth. Now it's over 40%. When the world goes back to normal, you will have a big segment of the population that will continue to use telehealth because now they've gotten used to it. I use my mom as a perfect example where she was one of those people that used to go to the bank a couple times a week, stand in line, deposit the check, get her passbook updated and things like that. COVID forced her to start using online banking. And now she even said to me a couple weeks ago, I can't believe what I was doing before. Like, this is just so easy now. And now she's using mobile payments as well. So, so you see a lot of these things, long-term behavioral shifts are taking place. Like DocuSign's a great example. Once a company starts using DocuSign, why would you want to print out a document, sign it, scan it, send it back when it's better to do through DocuSign? So COVID has accelerated a lot of longer-term behavioral shifts. I would argue that e-gaming is one of them. On the other side of it, though, it's sometimes hard for us to recognize that still only half of our entire world's population, a little bit more than half, is connected online. Yeah, half the population in countries like India and China are still not connected online. So as we grow that connectivity, as people get smartphones, that's going to be another big driver for e-gaming, because the future of e-gaming isn't tied to the consoles, right? We have about 200 million consoles around the world today. That's great. That's a lot. The future of e-gaming is tied to mobile. Today, mobile makes up about 50% of the e-gaming industry in terms of the total size of revenue. Most gaming companies, producers are trying to make sure their game works well on mobile. But as you get more people online, as you get more people buying smartphones, you will start to see even more growth in this space, because you'll go from 2.2 billion gamers worldwide to 3 to 4 billion to 5 billion, maybe ultimately 6 or 7 billion. That's where the revenue starts to really come in for these e-gaming companies. So I love the trajectory for this industry, specifically as it relates to mobile adoption.
I want to ask you why someone wouldn't just buy kind of the larger US equivalent ETF, ESPO. Why wouldn't I just buy that? Why would I buy a Canadian ETF instead of the US one?
Currency is primarily the reason. You would have to go and buy those ETFs in US dollars. Whereas for us, your currencies are hedged back to the Canadian dollar, so you're not wearing any currency risk when you buy the product. And for advisors like yourself, obviously you and I have a great relation. We've known each other for a while. You get great information flow from us in terms of updates on the product, in terms of updates on the industry. You won't get serviced from a US company. You would have to go and proactively look at information. But I would say typically the reason is currency.
Okay. What's going to be in your mind? Maybe, I don't know, you know this, maybe you don't know this. What's going to be the next biggest game you think that's going to, I asked a cinema guy, I asked Vincenzo Guzzo, who came on my show in April, I said, how many billion-dollar movies are there going to be this year? And he guaranteed me there'd be 5. And he put Mulan in there. He put like Star Wars, put Lion King. And I don't think any of them hit $1 billion. So I'm asking for prediction if you know any of the big games that are coming down the line. And if you don't want to answer that question, I'll just ask you for your straight up all-time favorite video game.
Mine. Well, so first of all, I think the next Call of Duty will probably be a big one. That is through Activision Blizzard. That produces the Call of Duty stream.
Those are like kind of automatic home runs, right? Those Call of Duties, they come out. It's kind of like a Star Wars movie, right? It's guaranteed to sell however many $1 billion, right?
Well, I mean, like the last Call of Duty, I think cost half of what the last Avengers did, and in one weekend did more sales. I mean, when you compare e-gaming to blockbuster film, I mean, it's just not even close. And what's great about e-gaming versus movies is the fact that the catalogs stay fresh for a long period of time, right? Like if you love a movie, maybe you watch it 3 times, 4 times, maybe even 10 times. But if you love a game, you know, like 100 times, it takes a long time for a game to get stale. That's 100 times that you're seeing those logos on the rink or within the game and things like that. So what's great about gaming from a revenue stream perspective is the staleness of the catalog. It takes a long time for it to die down. So that's one. My all-time favorite game that I played, I remember, I don't even know how many quarters I put in, but was Street Fighter.
Street Fighter, yeah.
At the arcade. Yeah, the first one. I don't think I ever had it on a console. I think I used to hang out I grew up in Mississauga, and I used to hang out in a pool hall after school, wasting too much time with my friends. And we used to gather around. And to your point, we used to watch each other playing Street Fighter, and then we'd switch up. We were nicer than your older brother was. We would switch up after we died, and then let the next guys come in and then watch them, and you'd have the full rotation. But Street Fighter was mine. How about yours?
Well, for me, it's kind of the high school. I mean, I played a ton of electronic arts, all the sports game, NHL 94. I played an obscene amount of time, NBA Jam. I played a ton, Tiger Woods golf. But I also got into these computer games. Like I started off with like Sim City, and then I got into like Heroes of Might and Magic, and I got into kind of RPG games as well. All the Ultima 7 and these type of games that were kind of precursors to Zelda type games. I played a ton of those, and I still play Civilization. Like the odd time I'll pull up my iPad and I'll have Civilization 2 on it, like from way back in the day.
Yeah.
And it's just kind of fun to just blast from the past. So I do get those guys. Think of those quarters. Like think of that revenue model, how awesome it was if you had a good game.
Talk about it. Yeah.
Myself. Like I'd go save my allowance, save whatever money I could, get as many quarters as I could. And I remember holding them in my hand and being like, okay, now I'm going to waste 1 quarter. And eventually, like, they're all going in the machine. It doesn't matter. But like all of us spending all of our allowance in that arcade every week.
But still the same problem, right? The pool hall or the arcade would buy the game, maybe even lease it, but buy the game. And then they would collect all the quarters, right? So it would all be about return on investment, but it was a one-time purchase, not recurring. For the game producer. But you're right, and you're right. I loved NHL 2K. as well. All of the NHLs, I played them. And in fact, one of the interesting things I noted, I played it a couple of years ago. And you remember when you played NHL 2K, like around the boards in the arena, it would all be fake companies, right? Companies that didn't exist, but they just tried to make it look like it was like a real rink. Well, today they actually have real companies on there, right? You have Coca-Cola. They're embedded in the ice. When I played a couple of years ago, embedded in the ice was the Adidas logo and things like that. So all these companies now realize with all this engagement, we might as well do it. They probably should have done it like 2K, Take-Two Interactive, and EA probably should have built this revenue model by getting sponsors a long time ago in the gym or at the arena or something like that. But now they're much smarter, and now they've got real companies sponsoring their little logos on the boards.
Madden, 1993, Madden on Sega Genesis is probably the game I played the absolute most.
It's a good game. I remember playing that.
First time they actually figured out 11 players aside. You could pick plays. You could actually have graphics, and it saved your seasons, right? So you didn't have to. Because my brother and I, what we did, I'm kind of embarrassed to tell this story, but I'll tell it anyways. We would have these books, and we'd have like pages and pages and pages of stats, and we would keep our own stats for our own leagues, and we would mimic the leagues that were happening. So like, okay, tonight in the NBA, there's 7 games, so we would play those 7 games. Tonight in the NHL, there's 11 games. We'd play and we'd keep stats of every single game, and then we would tabulate that in an old school Excel spreadsheet back in the day, or even a manual one, and we would keep track of top scorers. And it's just, we came a long way, that's for sure. But I
wouldn't give up growing up in that era for anything. It was awesome.
Oh, no kidding, man. Life was simple. You went outside, you played like crazy, and then when it was snowy and you can go outside, you played video games. I loved my upbringing in Marchand, Manitoba, with no neighbors. It was my brother and I in the middle of nowhere, and it was awesome. It was awesome. Man, we've run way past here on time. I should probably, I really do enjoy this type of conversation. And as a reminder, if you're watching on YouTube, take a sec to subscribe. YouTube, Facebook, LinkedIn, Instagram. Go on, subscribe, like, share. Give us your thoughts. Give us your feedback. If you'd like to book a no obligation consultation with us to see how this might fit into your portfolio, please go to www.speaktherob.com. We'd love to book that call with you. We could do a Zoom, your financial plan. If you don't know what to do with the market or how COVID has impacted your financial situation, please take a sec, go to the website, book a call. Raj, this was great. I'm thankful that you took the time to come here. I know you're busy. You manage $1.2 billion there at Evolve. I do value the time that you took here. Maybe one of these times we'll do like the cybersecurity story. That's a really interesting story as well. Maybe we'll say that in 2021.
Awesome.
Again, guys.
Thank you.
Thank you. Yeah. So it was Rob Tatro from the Rob Tatro Show here, the Tatro Show here, portfolio manager, Canaccord Genuity Wealth Management, and the Tatro Wealth Advisor Group. Thanks so much for tuning in, guys. Have a great day.